Okay, so let's look at the financial statements here. I think I'll read it because it's numbers here. It's numbers, but when you're going through financial statements, right? When I see financial statements like this, it's possible they can ask you questions around ratios. Now you don't know, you don't need to know, the ratios. It's not like you need to know the ratios they use at Goldman Sachs or JP Morgan. You just know the basic ratios. And after this, I'll send you guys a document on ratios. The ICA syllabus, focuses on some key ratios. A question like this has come before in the past, where they give a financial statement. Now, immediately when I see a financial statement, I won't be surprised if they ask you a question around ratios. I'll not be surprised, or let you do some analysis of some form. I'll not be surprised at all. So please note that, in my likely questions and solutions and my pre-sim material reports, I'll definitely talk about some of these things, but these are things you should note down so that it guides your learning. Okay. So you have turnover. Turnover is your sales, right? Now you see that your sales has declined from 140 million to 120 million. From 140 million to one. What do you think might be, now this is, we are doing analysis. You are not just reading numbers, so we are doing analysis. So you ask yourself, what might be, from what you've read so far, what might be some of the possible reasons why turnover has reduced by 20 million? What do you think are some of the possible reasons? You remember that when I was explaining the whole bottom line shrink, yesterday we talked about the fact that the directors were worried that profits were declining, right? So I said that, okay, it might be two things: revenue or turnover decline, or cost increase, or both. And we are seeing that clear here. I didn't need to look at the financial statements, but when I see that profit is declining, immediately, what are the components for profits? What makes up profit? Revenue, costs. Revenue declining will cause profit to decline. Cost increase will cause profit to decline, or both of those two factors. And we are seeing here that revenue has declined by 20 million. So it's not like I'm a magician, but you can tell some of these things. So you ask yourself, what are some of the possible reasons why turnover has declined? Why has it declined?
Probably a shift in demand because of Red Limited alliance with Boston Logistics. So they are doing their work on, so the customers are shifting to Red Limited.
Okay, so customers are shifting from SBL to other competitors because of an efficient distribution mechanism. That's what you're saying?
Yes, sir.
That's a fair point. Okay, does anyone have any other thoughts? What are some of the possible reasons why turnover would decline from 140 to 120?
I think when we were talking about green company, you made mention that since they are providing to the teaching hospitals, the client or the customers will get their drugs from the hospitals. So then they don't get to buy from probably over the counter. So that will lead to their the decrease in their turnover.
Okay, that's also a good point. Any other? So you see how like my former boss always used to say, the numbers tell a story. The numbers always tell the story. So you can look at the numbers and predict what was happening, or tell, based on what we know so far, tell what was some of the likely problems. Any other possible reasons? Why would you think that turnover will be declining? If you are shy to talk, you can, put in a comment in the chat. Why would you think that turnover will be declining? Okay, so so the two that you mentioned, these are very, very, very good points, right? These are very, very good points. But the 2 points that you raised, they are all in relation to demand. Revenue, as we all know, has 2 sides. It's price and demand. Price and demand. We haven't been told a lot about price. When we went through the case so far, we haven't been told a lot about price. What we know for a fact is that is demand, right? It's demand. So the 2 points you raised were demand-driven points. Okay, Caleb.
Okay, sir, you realize that since yesterday and today, we've been hearing the word affordable on both sides, on both the SBL and the competitors. So that can also be a way they're trying to fix the prices of the.
Fantastic. So that's why I kept on repeating affordable. It's possible that because the way so people are competing on price. People are competing on it. It's a possibility. We can't rule that out. Okay, Evelyn.
So I also observed that the digital opportunities that maybe they are not taking advantage of or making full, taking full advantage of could be a problem to their low turnover.
Yes, that's also true. And that's, that's on the demand side of things, because your distribution mechanism will affect, even how the demand from customers, Is your distribution mechanism solid enough that it's able to push your medicine to the customers, push the medicine to the customers. One thing that I remember I saw yesterday was the manufacturing plants. Did they have some issues? I think I saw something like that, but I just want to be sure.
Yes, it had an issue.
It had issues. So we do not know if they have capacity problems. We are not sure, because we are told that they have to make some form of investment to bring their manufacturing plants up to speed, So we do not know if they're having capacity problems. If they're having capacity problems, then it's definitely going to affect, them being able to serve their customers. So you see how you are able to lay out the whole thing. It becomes, one of the easiest papers ever if you know what you are doing. Okay. So once you've identified the problem, that's what I like about strategy. Once you have identified the problem, you can easily give recommendations. It then becomes easy. Okay, so the problem, you said revenue is declining due to, let's say, poor distribution network, or ancient distribution network. Then you talk about the fact that you could digitize your distribution network. You could partner with a distribution company, becomes easy when you're giving recommendations. I hope that makes sense.
Yes, sir.
Okay. Now you see that your gross profit also has declined. Your gross profit has declined, right? Why do you think gross profit will decline? This one, I think it's quite straightforward. Let me just ask.
Cost of sales is high.
Okay, cost of sales is high, or sorry, I can't hear you.
Because sales have reduced to affect the gross profit.
You seem very far away, so I don't know. I think I hear what you're saying. You said because yes, okay. You said because turnover is low, right? Cost of sales is high. Cost of sales is high. Okay, I know some of these terms. You guys are accountants and you guys are sharks, you know. So when we say cost of sales, what is cost of sales? When we say cost of sales, what is cost of sales? I know people say cost of sales, cost of sales. What is cost of sales?
So the cost of sales is basically the cost, the overheads. Let me put it that way. Basically, the overheads of purchases. So, or the fixed costs. So that's where. So usually the difference between the gross turnover and the gross profit is mainly the cost they use in probably producing and producing and making the goods available to sell. So that's the cost of sales.
Okay. Does anyone have any alternate opinion? What is cost of sales? What is cost of sales? Sorry, your voice is very far away. I don't know where you are, but okay, Michael, you can speak. Was it Michael who was talking?
Yeah, is it clearer now?
Yeah, it's very clear now.
What I'm saying that the cost of sale comprises the cost of stock, and then the purchases and the carriages that we use in getting the goods to the market.
Okay.
So when that is high, it affects our gross profit.
Okay. So I'll go a step further and ask, why will cost of sales be high? Why?
So I have a question.
Yes.
I believe that if you look at the proportion of turnover to gross profit in the year 2019 and 2020, as we all say, cost of sales has marginally decreased. It has not increased. So the issue will then come from the turnover, not the cost of sales.
Okay, I was even coming to that. I was even coming to that. So, but that's like a detailed analysis. But Caleb has made us skip everything. You know, Caleb has made us skip everything. So let's take it step by step. Let's take it step by step. Let's just assume that we don't know what Caleb is saying. Let's just assume we don't know what Caleb is saying. Why would cost of sales? Because if you look at turnover, right? Turnover is 120. Gross profit is 50. So what will be the cost of sales for 2020? 70, right?
Yeah, 70.
Okay. And what will be the cost of sales for 2019? 79.
79. Yeah.
79. So it shows you that cost of sales has declined.
Has reduced, yeah.
Has reduced. But I just want us to think broadly about this, right? I want us to think broadly about this. So okay, since Caleb has taken us there, let's just go there. Okay, why do you think their cost of sales has declined? Why do you think their cost of sales? The reason why gross profit has declined is from lower turnover.
Yeah.
That's the main reason, because we can tell that cost of sales, has declined. Cost of sales has declined. cost of sales has declined, but we do not know whether overall costs, which is direct and indirect costs, we do not know yet. So I'm just taking it step by step. So cost of sales has declined. Why do you think cost of sales has declined? Why?
So can you probably
please, Caleb, just hold on. So just hold on. Are people following what we are doing here?
Yes, sir.
I just want to be sure if everyone is following. If you can give me some signal, if you are following, just say yes in the chat so that I know that people are following, because I don't want, this is the financials, I don't want people to miss out. If you are following, just say yes so that I know what is going on. Anyway. Okay. Okay, Caleb, go on.
Okay, sir. I was saying that their cost of sales may decrease as a result of the good relation they have with their suppliers. So they may get the product cheaper, but probably they distributing it will lead to the issue with the turnover. But they procuring the supplies or the medicines, they can get they probably got it at a cheaper price or at a discount from their suppliers.
Fantastic. So when you see cost of sales down, it means that you have a supplier, because you remember cost of sales in your normal accounting is what? Opening stock, add purchases, less closing stock. And any carriages, right? So it's mainly centered around your purchases, mainly centered around your purchases. So when you see cost of sales going down, it means that the people who you are buying from or your suppliers, they are giving it to you at a good price. So it goes to show that, you have good suppliers, reliable suppliers who are able to provide you with goods or with medicine or with drugs or whatever it is at a very, 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 good price, which is a positive sign, right? Which is a positive sign. So the main work for SBL is how to increase their turnover. That's the main work. That's why I let us spend time around identifying the problems. Once we know the problems, then we know the solution. So for example, if we say it's a capacity problem, we know what to fix. If we say it's a distribution problem, we know what to fix, right? That's very, very important. So right now we know why gross profit is down. Gross profit is down because of turnover. Now, one of the things I've done, which we would treat most likely tomorrow, is doing an analysis of this. So you look at year-on-year growth, those kind of things. So one of the things other people do is, I want to show that to you in Excel, because like that would help. Another thing people do is, you look at gross profit as a percentage of turnover, right? Gross profit as a percentage of turnover. Then you can kind of like tell exactly what's happening. So if you look at gross profit as a percentage of turnover, for 2020, it was 42%. And then for 2019, we have 43%. These are several analyses that you can do around, the financial statement to understand what is going on. Now we move on to operating profit. Operating profit. Okay, how do we arrive at operating profit? How do we arrive at operating profit?
The operating profit utilizes operating expenses from the gross profit.
Okay, so you take out any operating expenses from this. They haven't given us operating expenses, but when we look at this, we can tell in 2019, we can tell that the operating expenses was 40.
40, yeah.
Which is 61 minus 21. We're able to tell 61 minus 21. And for 2020 is 38. Am I correct? 38.
Yes, yeah, 38.
Yes, please.
So the operating expenses as well too have reduced. So these people, they don't seem to have, cost is something you always want to reduce. If you are reducing your costs, it's a good thing. You always want to reduce. But the main chunk of the problem is sitting around turnover. And that's due to the fact that there is crazy competition.
Competition, yeah.
Competition is making the market a lot more fragmented. These people haven't taken advantage of digitization. Other competitors might be using efficient distribution mechanisms or distribution networks. They probably have capacity problem. It could be a whole several things, several problems. So you see that their problem is not necessarily cost, because cost is declining. Even though it's not declining, it's not that huge though. When I go through the Excel, God willing, tomorrow, you would see some of these things as I present the entire report. So you see that operating profit is declining, mainly due to the fact that turnover has declined. Right? And now you have the next line as well. Profits before taxes. Profits before taxes. Then you have your taxation. Oops. You have your taxation, and then you have your profit after taxes. Profit after taxes. Right? You have your profit after taxes.
Yes, sir.
Then you have some form of dividend that they pay out, some retained profits. Now, so what do we get from the income statement? What are we getting? Main issue is turnover, right?
Yeah, main issue is turnover.
Main issue is turnover. They seem to be doing a good job on
the cost side.
On the cost side, but this is something. The way cost is, you also want to be reducing, but main problem is turnover. Main problem is turnover. I hope that makes sense.
Yes, sir.
Okay. Now we move on to the statement of financial position. Statement of financial position. Okay. The first thing we have is intangible assets. Intangible assets. Why do you think what are some of the things that go into intangible assets?
Patent.
Patent, the brand name.
Okay.
Goodwill.
Okay, so why do you think intangible assets will increase? This one we do not know yet. We are just making assumptions. Very, very wild assumptions.
So can we say that probably when they ventured into Sierra Leone, let's say probably they bought a company in Sierra Leone or something, so probably that resulted in goodwill or something.
So did they buy a company in Sierra Leone?
They have a subsidiary there.
Okay, so I don't want to go into goodwill calculations and all of that. I just want this to be. Sorry.
I think buying a subsidiary there, the goodwill of the subsidiary will not necessarily reflect in their own financial statement here. The goodwill will reflect if they are consolidating. So, and this is the SBL financial statement, only SBL financial statement. So I don't think the goodwill of the Sierra Leone subsidiary will reflect in here.
Yeah, it's true.
Okay. I don't want to go into, we are just making, I just want to know what are some of the things that are likely to go into intangible assets, and why the increase? Why will intangible assets increase? Do they have any patents? Like, are they operating through somebody or something like that?
Yeah, those two countries they are operating, they have some alliance with OJ and those two. Gambia, they have more or less an alliance with former OJ Pharmacy.
Mm-hmm.
And then Liberia too, they have another alliance with Par Pharmacy, where they sort of come together for them to distribute their goods through them.
Okay, but does that have an impact on intangible assets?
No.
Okay, so let me make a very wild guess.
Okay.
Very, very, very wild. Okay, so because they're into manufacturing of drugs, probably may have some patent to certain particular drugs they manufacture.
Fantastic. So that's a possibility. You know, they're into manufacture of drugs, so maybe they came up through their research, they were able to come up with some kind of, you know, drug. They've been in this business for how many years? 50 years or so, something like
40
that.
something.
40 something, yes. So they've been able to come up with some maybe new drug that, you know, is DS. So they have a patent to it or something like that. It's very, very possible. It's very, very possible. Then what about tangible assets? We have no breakdown. But what are some of the things? If you look here, tangible assets.
They have motor vehicles.
Yeah. So I'll just say it's flat. You know, 42, 43, not much of a difference. Just flat. If you look at inventory as well, right?
Yeah.
It also seems to be flat as well, not too much of a difference.
The receivables.
But we see that trade receivables.
Yeah.
Why would they have trade receivables? Why would they have trade receivables? Why do you think that this pharmaceutical company is going to have trade receivables? Trade receivables means they have debtors, and it has increased. The interesting part is that it has increased.
Yeah, when you check under retail and wholesale distribution, the second paragraph,
hold on, let's go there. Hold on.
Okay.
So you see, this is how I want you to approach the pre-scene. And a lot of students, they don't do that. They don't do that, and they go into the exam. And then say, hey, ICA4. 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 Yeah, so if you don't, okay, it says second paragraph.
Page 6.
Yeah, I'm on page 6. So
okay.
Second
down there after SBL uses pre-qualified independent farmers. Down there, they are partners, government store, medical stores, hospitals, clinics, and private health facilities as key partners. So could it be that maybe they sell on credit to those partners for distribution?
Fantastic. I said, I buy new media, public
medical stores in this stuff.
Yeah, public stuff.
They don't pay cash.
Yeah, it's possible that, you know, some of their money has gone to lock with some of these people. You know, they sell to some of maybe these government agencies or these government medical stores on credit. And it's possible, right? It's possible. And they haven't been paid yet.
Yeah.
And they haven't been paid yet. I don't want to go into the nitty-gritties of why they haven't been paid yet. Otherwise, at that level, I'll be making a lot of assumptions. So let's just leave it at that. Let's just leave it at that. We know that trade receivables has increased. Now, if trade receivables has increased, what I'll be curious to see is cash. I would expect that cash might decline.
Let's see.
It doesn't always happen immediately, but trade receivables means that my money is with somebody. My money is with somebody. So that's how you look at the financials. My money is with somebody. So you would see that if you go to cash at bank and in hand, right? The cash at bank and in hand has also declined.
Yeah.
Has also declined. And anytime, at this point, I do not want to say they are having cash problems and all of that. I do not want to be saying all of that, right? I do not want to be saying all of that. But one of the things that I will look out for is if someone can do this calculation real quick, right? If someone can do this calculation real quick, we want to look at trade receivables over total current assets. Trade receivables over, I'll pull up my analysis, God willing, tomorrow. But if you look at trade receivables as a component of your current assets, in 2019, it was 45%, right? In 2019, it was 45%. In 2020, it moved up to 60%. So trade receivables is a huge chunk of your current assets. So, so what does it tell you to do? What does it tell you to do? It means that, we must find a way of collecting our money. We must find a way of collecting our money. We do not know the credit policy that SBL has with some of these institutions, but we must find a way of collecting our money. And there are several ratios to calculate, the days sales outstanding. I don't want to go into all of that today, but I'm just fleshing out, the financials. I hope that's making sense, because for trade receivables, it's increasing by 10 million in a year. Your cash is declining by 4 million. By 4 million, right? By 4 million.
2 million. 2 million.
By 2 million. Sorry, by 2 million. By 2 million. So yes, by 2 million. So you would want to make sure that you're able to collect your receivables. So that's something I would note as a problem, apart from turnover. Turnover decreased by 20 million. This one, you're having receivables increased by 10 million. That's a substantial amount. That's a substantial amount. I don't want to go into some, analysis, but if you look at the ratio of cash to trade receivables versus in 2019 versus the ratio of cash to trade receivables in 2020, it tells the story very perfectly. But all we need to know is that we have to collect. I'm curious to see if the pre-sim material gives us information on these trade receivables. Now you have your payables, right? Your payables are also increasing. Your payables are also increasing. When your payables are increasing, what impact does it have on cash? What impact does increase in payables have on cash? Sorry? Sorry, we can't hear. What impact does an increase in payable?
Increase in payables increases cash.
Yeah.
Increases cash. Okay, yeah. So that's true. That's true.
It leads to an increase in cash.
Sorry? Sorry, what did you say? So you see, the main problem with cash is with the trade receivables. Okay. Then you have your share capital, you have your retained earnings, and all of that. Okay. Then you also have the analysis of turnover by product group and area. Analysis of turnover by product group and area. So right now, you see, they are not giving us this analysis of turnover for fun. It's because we saw a decline in the turnover. So now they are telling us, they are giving us the breakdown, right? So that we can see, we might be able to see where the issue is coming from. If you look at branded pharmaceuticals, it declined by
25.
a whopping 25 million.
5 million.
Right? Generic, 5
million.
million. OTC,
Went up 10 million.
10 million. So you see, this is what we are trying to discuss yesterday, right? So right now, it means that they are not only into OTC. SBL is not into only OTC. So digitization is one of the things that they certainly need to consider, right? OTC pharmaceuticals are the ones that you have to come to the pharmacy yourself and you get it over the counter. You know, there are some drugs that they are generic. You can get them on Amazon. You